Hello everyone, Paul Bagan with New York Life. I am an agent for them out of the Stockton office. There's always confusion about insurance. What's life insurance? What's whole life? What's term? What's conversion? Well, the confusion goes on, and that's the purpose for this video. I want to give you a very simplistic explanation of the two most popular life insurance policies. One is known as term and the other is known as permanent. Now, I'm going to break it down for you by first looking at term insurance. Term insurance has a purpose, and I'll explain that in just a moment. The first thing we have to know about term is that you can get a very large amount of coverage for relatively inexpensive cost. You can get that coverage for 5 years, 10 years, 15 years. You do want to keep in mind that each year that your policy expires, then you can renew it. However, you will be looking at a larger premium payment. Now, why do people get term insurance? Very simple. It is typically young families that have a home. They're just starting off and they don't have a lot of money available, but they want to secure their family and their home. So term insurance is perfect for that reason. It will cover the death of an individual, like a father or mother, whoever happens to be insured, and it will protect them from having to move out of their home. So again, keep in mind that term insurance is short-term insurance, 5, 10, 15 years, but you can get a larger amount of insurance. But each year that your policy renews, you will look at a larger premium payment. The other thing that you have to keep in mind is that with term insurance, it's money that you do not get back to you. Let me explain. We'll move now into permanent insurance. Permanent insurance is something that's, well, a little bit higher in its premium costs at the start. But the benefit to it is that your premium payment never changes. It's a constant. At the end of 5 years, it doesn't renew. You still are paying the same premium. So that's one thing to keep in mind. Another thing to keep in mind is that with a permanent life insurance policy, it will earn you interest. Interest is paid on your money, meaning every time you make a premium payment, you're going to be getting money coming back to you. Now, in addition to that, you're also going to receive, well, at least it's highly likely, that you can receive dividends. Dividends is another way in which you can build the cash value of your permanent policy. Term has no cash value, but a permanent life insurance policy has a cash value attached to it. So as the years progress, the value of that policy becomes greater. If the policy was for $1,000, say at the end of 10 years, maybe now it's $1,000. In addition, you're also going to have, I'm taking a random number, you're going to have $350 added to that. So now that increases the value of your death benefit. The other thing that you can't do with term is you cannot borrow against it, but you can borrow against your permanent term insurance. The cash value as it is built up, you may borrow against it. People like to do that for various reasons. Some people don't take a loan against it, and that's great as well. One last way of looking at it. Say there's two identical parking garages. One parking garage charges you 50 cents a day. The other one charges you $1.50 a day. Which garage are you going to park your car in? Well, it's obvious. The one for 50 cents a day. But now let me add something to this. Let me suggest, though, that what you didn't know at the time was those individuals that parked in the $1.50 a day parking garage, at the end of each month, they were receiving money back. Enough money back that it was significantly reducing the cost of using the parking garage to the point where it was less than $1.50 a day. Now, with that new information, which one would you select? Well, of course, you'd select the one that's giving you a rebate. So this is the difference between perm and term insurance. Term, money in, money out, grows no value, but is perfect for that individual who is looking to cover a large expense or a young family that is just starting off. Perm insurance is fantastic for any individual at any age that's looking to prepare themselves to save for, well, their retirement, because it is going to gain a cash value. And the very last point to be made on perm insurance is that the money that you receive from your permanent insurance is tax-free. You pay no taxes. If you take a loan against it, no taxes. If you pay against, if they give you money for a payoff, no taxes. I'm Paul Began. I'm with New York Life. I am an insurance agent out of Stockton, California, and I'd love to be able to be of some further assistance to you. I'm at area code 209-910-1411. Have a wonderful day.